being in the private market, in my opinion, I think is definitely less risky, especially if you're working with somebody and you get to have that constant, form of communication. Simon Property Group, you can't call the CEO and ask, hey, what's going on with the property? You just kind of hear about it every quarter.
On this episode of Early Bird, Anthony Scanderito, co-founder and managing principal of Red Knight Properties. Anthony joins the podcast today to talk about investing in real estate in 2022, specifically multifamily commercial real estate, and his outlook for the real estate market. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. All right, Anthony, thank you so much for joining us today on the Early Bird podcast. How are you doing?
Good. How are you, Stephen? Thanks for having me on.
Well, thank you very much. Today, we are going to look at an outlook for 2022 on multifamily commercial real estate. But before we get to that, let's talk to the audience a little bit about your background. You're the co-founder and managing principal for Red Knight Properties, which is a privately held boutique multifamily and mixed-use real estate investment and property management company. Tell me, how did you, I guess real quick, get started in this multifamily real estate market?
Yeah, make a long story short, and thank you again for having me. I was, I was working for another real estate operator. This is a private real estate operator from about 2015 to 2020. And we were buying multi-tenant Class A office, kind of, investment grade properties. So we'll buy an office building that has 10 tenants and they might have, maybe Panasonic on 2 floors and another, Fortune 500 company on 2 floors, et cetera. So had a great run there. I basically was able to see all the processes in commercial real estate, from acquisitions to asset management, property management, development, construction, et cetera, project management. And at the same time, I was able to kind of, buy a few multifamily properties. And when I say multifamily, I mean, apartment buildings. So, I started out with a 2-family house, kind of on a part-time basis, and I was able to buy that and, renovate the units. And I still have the building today, but I bought that and basically it still cash flows me today. And I, was kind of addicted to the concept of passive income without really doing too much. But that's on a smaller scale. So started out with a 2-family and basically grew today we have about almost 700 apartment units in our portfolio, with assets under management of about, let's call it $80 million. Basically from 2016 is when I started buying on my own with some partners, and then kind of grew that to, an expanded audience once we started to buy some somewhat larger deals, and we were confident in our investment strategy, and we were producing the returns we said we were going to produce. So we brought along other investors. These are all retail investors, where we form, what's called a syndication, where we basically partner together. And these could be, just either high net worth individuals or just working professionals. So we have, lawyers, doctors, real estate professionals. We have all sorts of different archetype partners, and they're all passive. They don't want to have anything to do with the day-to-day operations of the properties. So that's where we come in, and we handle all of that. So we just distribute checks every quarter. So we're all about creating value, and we like to buy undermanaged and valued assets in kind of underserved areas. We're in 4 different states right now. I'm based out of New Jersey, and we're kind of up and down the East Coast, anywhere from New Jersey all the way down to Florida. So that's a little bit about my background and how I got started, Stephen.
Well, passive income is great. A lot of investors, especially retail investors, are always looking for that. And just to plug, you also have a podcast called Discovering Multifamily, where you talk about this more in detail. Definitely, listeners, definitely check out Discovering Multifamily. It's a wonderful podcast to listen to. So I guess as we look into 2022, we want to definitely give the listeners some sense of where the real estate market is heading, especially as it relates to multifamily commercial, which is kind of the area you're involved in. Before we get to that, Anthony, can you tell the audience a little bit, real quick, what exactly is multifamily commercial? What does that mean?
Yeah, I kind of maybe skipped over that a little bit, but it's basically any building that has more than two apartments in one setting. Now, you mentioned commercial. Commercial is usually anything that has 5 units and up in one building. We specialize in buildings that have, in a complex, usually our average is about 100 units, at least now it is.
Mhm.
We didn't start that way. Like I said, we went from twos to tens to 20s to 50s. Usually, let's call it 50-unit apartment complex. Maybe there's 4 buildings on one lot, or 5 buildings on one lot. Each building has 10 units. So, and obviously we rent them out and then we collect the cash flow. So that's basically the definition. Where we specialize in is what a lot of industry professionals call workforce housing. So a little bit, areas that have kind of been a little bit underserved for a very long time and are, they're growing in terms of population, and a lot of different diverse industries are coming into those areas. We get a lot of workers that, work in the industrial field. So they work at, in the supply chain, logistics field, shipping, distribution, warehousing. Those jobs really aren't going anywhere. So we kind of like to look at, obviously, the employment trends as well. So, like I said, we're in 4 different states, so we try to diversify too.
Got it. And so I guess as we look into the next year and where this market might be heading, let's give the audience a sense of where it is right now. What exactly happened in the real estate market in 2021?
Yeah, I mean, what happened in, going back to, early pandemic, March 2020, obviously the debt market kind of shut down for a few months. Transactions were down, pretty significantly in 2020. A lot of people waited on the sidelines to see what was going to happen until like late fourth quarter of 2020. Transaction volume started to pick up. So transaction volume was pretty much at an all-time high, a little bit over 2019 transaction volume, because there was so much pent-up demand and liquidity. Obviously, the Fed funds rate was basically at zero. So, interest rates are still very, very low. You saw a lot of lenders come back to the market in fourth quarter of 2020, and now 2021, there's been kind of a buying spree for multifamily, which is kind of bringing prices up to levels that we didn't think were possible. So, moving forward into 2022, I think, the rental market, there's still a supply and demand problem. There's obviously supply chain issues and construction cost issues. We usually buy product that's built in the 70s or 80s, where we try to renovate and bring up to today's standards. We still keep the existing structure. So I think that, focusing on those types of properties versus ground up development is more advantageous, just because of inflationary pressures and being able to keep up with the rents you need to charge in order to be profitable. So I do think you're going to see more of what we're doing in 2022. You still will see development, but there'll be more, I think, somewhat government funded in terms of tax credits and whatnot. It has to be in order to make it profitable for the developer or sponsor. So, I think the market's going to be pretty healthy to 2022. Obviously, it's somewhat rate driven as well. The Fed started the taper process. We'll see what happens with that. Even where they're targeting at the end of 2022. Rates are going to move probably 75 to 100 basis points, and we've seen that market before. I'm actually excited about that because it kind of takes a lot of, I would say, dumb money off the streets if they're not really executing on their business plan, and they took variable rate bridge debt and they don't really know what they're doing. They can get really screwed when the rates go up. So kind of for a seasoned operator, you want to set yourself up for a situation like that to happen for your competition, so you can kind of swoop in and be advantageous in your decisions, and it reduces competition. So I'm actually excited to see what happens. When the rates do rise, I actually encourage it, and I think it's needed.
So it sounds pretty exciting right now. Is there anything currently in the real estate market that may have surprised you? Or is this, exactly what you were expecting, at least 12 months ago where we'd be right now?
Yeah, I guess I wasn't expecting, when they talk a lot about CPI. I don't think rent is rent included in that number. I think the rent, if it is included in the CPI number, I think it was grossly underestimated. The lowest rental increase I've seen on any of my properties has been 10%. I think they've reported 3%. It's not accurate. I talked to so many other people too, so I don't know where they're getting their numbers from. So that surprises me. That's a big number, and I think it's gonna continue into 2022. It's still not. It might not be 10%. It might be 6%. But those are still pretty strong numbers. It's a little bit unsettling. So, for the economy and the renter. Rents can only go up so much. So that surprised me in 2021. Those numbers. But again, it all comes down to monetary policy to see what happens.
Monetary policy does play a big role. When we return, we'll hear from Anthony about the advantages of investing in real estate and how retail investors can get started. But first, let me tell you how you can become a more informed investor through Early Bird, a free daily email newsletter. Early Bird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Early Bird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. So, Anthony, today we are talking about multifamily commercial real estate investment. As we start 2022, what kind of outlook are you anticipating?
Yeah, like I said before, we have a supply and demand issue in multifamily real estate. It could be called affordable housing, workforce housing. There's so many names to it, but there's basically not enough housing to meet demand in certain areas of the country, and then you have jobs looking to expand, and they need to house their workers, especially for, like I mentioned, we look a lot at logistics companies, et cetera. They have to be physically there. They can't work remotely on Zoom. And it's too expensive to develop. So we're still going to have a supply problem in the United States, which again is only going to drive up the pricing of multifamily housing. So it's still, the fundamentals, in my opinion, are still strong. It's not the sexiest asset class. I would say industrial for real estate is, but multifamily is right behind.
It sounds pretty exciting. It's certainly an interesting time to be in that arena. I'm wondering from a retail investor standpoint, I know your business definitely caters to that audience. What are the advantages as a retail investor to having some of your portfolio in real estate? There's no shortage of alternative investments today for retail investors. You have crypto and so many other types of alternatives to go into. Why real estate?
Yeah, I mean, it's a great question. I have, right now, I'm 90% real estate, 10% cash. But again, I run the business, so it's a little bit different. I wouldn't encourage, passive investors to do that. But, you know, we were talking about this before. It's a great hedge against inflation, as inflation continues to be a problem in the economy. Your rents go up too, so you are somewhat protected from that. The thing you really got to be careful for is operating expenses, because your operating expenses can go up too, to levels where you kind of just break even on the inflation. So it is a good hedge against inflation for sure. You do want to be somewhat diversified outside of maybe the public market. Real estate is less liquid. I've seen what it's done for my personal wealth and my community, my investor community's wealth as well. I've had 21-year-old investors start out with $50,000 investment, and now it's worth $300,000 because we're able to turn the money around into different deals. So, it's definitely, I would say, an understandable asset class. You have tenants and they need housing. So it's very simple to understand, instead of reading through companies' 10Ks and understanding the stock charts. For me, that's always been somewhat of an issue. Real estate, you don't have to check on day to day. There's a lot of tax advantages as well, even if you're a passive investor, depreciation, bonus depreciation, etc. I think for me, it's because I understand it. And for anybody considering investing in real estate, you should obviously get educated. And that's why I have the podcast, Discovering Multifamily, and other, content that I put out. It's because it starts out by getting educated and just keeping up with your education. I think that's important. Know what's going on in the market, and hopefully you'll be fine. But yeah, it's a great hedge against inflation. And like I said, there's lots of different ways to create value and return capital and keep growing portfolios.
You're right. It certainly could be a hedge against inflation. Thank you for breaking down the benefits as well as some of the drawbacks, the liquidity issue and whatnot, operating expenses. So as you were alluding to, if you are a retail investor, certainly the first step to getting involved in real estate is going to probably be education. But are there some in-between steps? Would you advise maybe, retail investors start looking at REITs, whether those are public REITs or private REITs? Are there some in-between steps before, getting involved?
Yeah, there's no one fits all path for retail investors. They can start out in the public markets and REITs, just like investing in any other type of security. Obviously, doing your research, that is definitely passive. It doesn't provide the same tax advantages as private placement, for sure, but it does provide you some form of dividends, and hopefully, some equity appreciation. There's not that many multifamily REITs. That's another key. There's more retail. So if you want to invest in retail, there's some industrial REITs. Like I mentioned, retail. There's a whole lot of retail REITs. There's office REITs too, if you're interested in office. There's hotels. It all depends upon your risk profile. Being in the private market, in my opinion, I think is definitely less risky, especially if you're working with somebody and you get to have that constant, form of communication. Simon Property Group, you can't call the CEO and ask, hey, what's going on with the property? You just kind of hear about it every quarter through the reporting. So, it's definitely not one size fits all. It could be something that, you could start out with just to get a feel for the industry. It's definitely different. Or you can start out like I did, buy a couple of properties on your own, small 2-family, 3-family homes, see if you like it, see if the active part is for you, if you like chasing tenants down for rent, etc. Or if you want to be a little bit more passive, but you still want very similar, if not same benefits as if you were active. So many different ways to get involved.
There's certainly a lot of ways to enter, as you just said. I guess to sum it up, looking at the multifamily commercial real estate investment market for next year, there are so many. You seem really optimistic about where the market is heading. Is there anything that might make you sound a little cautious, that you might be a little concerned about?
Yeah, like I said, I'm optimistic just because there's a fundamental supply demand issue going on. You have to be cautious with putting on crazy debt. Don't be over leveraged, especially when rates rise, values tend to drop. It's not a substantial drop. Real estate's very slow in terms of the cycles. So you're not going to see, even if rates rise 100 basis points by the end of 2022, you're not going to see a 20% or 30% drop in your property value. You're just not. That's not how, real estate's fundamentals have been over the course of history, pretty much. You might see small drops here and there. You just really got to, watch like I said, your expenses. You got to watch your rent roll. You got to, outbeat inflation.
Makes sense. Anthony, thank you so much for coming on today and explaining an outlook for the multifamily commercial real estate market in 2022. Really appreciate it. Before we wrap up, I just have one final question, and it's the big question of today's podcast. The question is, if you can only eat one food again for the rest of your life, what would it be?
I mean, I do like pizza, so I'm going to have to say pizza.
Thank you again to Anthony Scanderito for sharing your insights on real estate. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.